The next time your phone rings, the person on the other end may tell you that a cash transaction over $10,000 has triggered a federal alert, that your Social Security number is tied to suspicious activity, and that you need to act right now to protect your money. For a lot of older Americans, that kind of message sounds just believable enough to be frightening. So here's the question. Is there really a hidden $10,000 rule that could put seniors under extra scrutiny? Or are scammers using a real financial reporting rule to scare retirees into making a terrible decision? What makes this story so important is that it mixes one real rule with several very false claims. Yes, there are federal reporting requirements involving transactions over $10,000, but no, that does not mean the IRS is suddenly targeting retirees just because they are older, on Social Security, or moving their own lawful money. And that distinction matters because scammers often build their entire script around one true detail and then pile on lies until the victim panics. Here is the calm, verified version. There are two separate reporting concepts people often confuse. One involves businesses that receive more than $10,000 in cash in a trade or business. Those businesses may have to file IRS and FinCEN Form 8300 within 15 days. The other involves banks and financial institutions, which generally must file a currency transaction report when cash transactions over $10,000 are conducted by or on behalf of one person in a single day. Those reports exist to help detect money laundering and financial crime. They are not by themselves proof that the customer did anything wrong. That last point is the one many people never hear clearly enough. FinCEN says there is no general prohibition against handling large amounts of currency, and the filing of a currency transaction report is required regardless of the reason for the cash transaction. In plain English, a large lawful cash deposit does not automatically mean you are in trouble. It means the institution follows a federal reporting rule. That is very different from being targeted. But here is where seniors can be especially vulnerable. A scammer may call and say, "Your bank reported a $10,000 transaction," or "The IRS and Social Security flagged your account," or "Your Social Security number is connected to financial crimes." Once fear takes over, the caller starts giving instructions. Withdraw money, buy gold, send a wire, read back a verification code, or move savings to a so-called safe account. The Federal Trade Commission and the Social Security Administration have both warned that this exact kind of protect your money story is a scam. If you've ever received a call that sounded official, let me ask you this. Would you immediately know the difference between a real federal reporting rule and a fake emergency built around that rule? That's exactly why this topic deserves a closer look. The official agencies are actually very direct about the warning signs. Social Security says scammers pretend to be from an agency you know, claim there is a problem, pressure you to act immediately, and demand payment in a specific way. SSA also says the agency will never threaten arrest, suspend your Social Security number, demand secrecy, threaten to seize your bank account, or tell you to move your money into a protected account. The IRS says something similar. It typically contacts taxpayers the first time by mail delivered through the U.S. Postal Service. It does not demand payment through gift cards or prepaid debit cards, and it does not threaten to call law enforcement or immigration officials to pressure immediate payment. So if someone claims a $10,000 issue has triggered urgent IRS enforcement and wants money right now over the phone, that is one of the biggest red flags you can hear. Now, let's deal with the part that confuses people most. Who qualifies and who does not? If you are a retiree withdrawing or depositing your own lawful money, the existence of a bank report does not mean you lose benefits, owe a penalty, or become a criminal suspect. The reporting system is aimed at tracking certain cash movements, not automatically punishing ordinary customers. On the business side, Form 8300 applies to people or businesses receiving over $10,000 in cash in a trade or business. That is not the same thing as a retiree making a normal bank deposit from savings, a home sale, or a vehicle sale. What can create real legal risk is something called structuring. FinCEN explains that breaking up cash transactions into smaller amounts for the purpose of avoiding the reporting requirement is illegal. So the rule is not never deposit more than $10,000. The real rule is that financial institutions report qualifying cash transactions, and intentionally splitting them up to dodge that report can be a crime. That is a major difference, and scammers know most people do not hear that part clearly. That misunderstanding creates the perfect setup for fraud. A caller can sound knowledgeable by mentioning the $10,000 threshold, then make a false leap by saying your retirement account is about to be frozen, your Social Security number is suspended, or your monthly benefit is in danger unless you cooperate. The Department of Justice's Elder Justice materials describe Social Security imposter scams, in which victims are told their number has been suspended or linked to crime, and that their bank funds may be seized unless they act quickly. DOJ also describes IRS imposter scams, where callers demand prompt payment through wire transfers or stored value cards. In just a moment, I'll explain what would actually need to happen before any legitimate federal payment issue, tax issue, or benefit issue could affect you, because that timeline is one of the easiest ways to separate fact from fear. First, it helps to understand what real agencies do not do. Social Security says it will never ask you to pay with gift cards, cryptocurrency, wire transfer, prepaid debit cards, or mailed cash. It will never offer to move your money to a protected bank account. The FTC goes even further and says anyone who tells you to withdraw cash, buy gold, or hand money to someone for safekeeping is a scammer. That guidance is especially important for retirees who may keep larger savings balances or receive regular benefit payments that scammers see as dependable targets. So, what would have to happen before any real government action took place? In most IRS matters, the agency says it generally starts contact by mail. That means there is a paper trail. There is notice. There is time to verify. There are taxpayer rights. And for Social Security, if there is an issue with your record, SSA says it will typically mail a letter. That is the opposite of a sudden, threatening phone call demanding same-day action. This is why the most dangerous scams are the ones that compress time. The caller wants you scared, isolated, and rushed. The FTC says scammers often tell people not to trust anyone else, to stay on the phone while going to the bank, and to move funds from bank, investment, or retirement accounts to protect them. Once that happens, the victim is no longer responding to a report. They are being manipulated into authorizing the theft themselves. And here is another practical point for seniors and retirees. A real reporting threshold is not the same as a benefit rule. A currency transaction report does not automatically reduce Social Security. A Form 8300 filing by a business does not automatically suspend your Social Security number, and a call claiming your COLA, benefit increase, or account status requires a payment or personal information is a red flag, because SSA says it will never ask for payment or personal information to activate a COLA or other benefit increase. Have you noticed how many scam calls try to mix 3 different fears at once? Taxes, Social Security, and your bank account? When all 3 get combined in one call, that is usually not a sign the threat is more real. It is a sign the script is more sophisticated. As for deadlines, the only verified deadline in the reporting rule itself is for the filer, not the consumer panic story. Businesses required to file Form 8300 generally must do so within 15 days after the cash transaction. That does not create a 15-day countdown for a retiree to call a number, wire money, or clear a report. On the banking side, the reporting obligation belongs to the institution. So if a caller gives you a same-day deadline to protect benefits or avoid arrest because of a $10,000 transaction, that is not how the official process is described by the agencies. What should viewers do right now? First, do not move money because of an unexpected call, text, email, or social media message. Second, do not click links in unexpected tax refund messages or Social Security alerts. Third, verify independently by calling the real bank, advisor, SSA, or IRS using a number from an official statement or official website, not the number the caller gives you. And fourth, report the scam. SSA directs people to report Social Security scams to the Office of the Inspector General, and the FTC says to report fraud through reportfraud.ftc.gov. If you already responded to a scammer, do not blame yourself. SSA says recovering from a scam can be difficult, but there are steps to take, including stopping contact, protecting your Social Security number, and notifying the credit bureaus if necessary. The IRS and FTC also provide scam reporting and recovery guidance. The most important thing is to act quickly and through verified channels. So let's bring this together clearly. Yes, there is a real $10,000 reporting framework in federal financial rules. Yes, banks and some businesses have reporting duties tied to cash transactions over that threshold. No, that does not mean the IRS is targeting seniors simply for being older, retired, or on Social Security. And no legitimate agency is going to call you out of the blue, threaten your benefits, suspend your Social Security number, or demand that you move money, buy gold, or pay with gift cards to fix the problem. The real danger is not the reporting rule itself. The real danger is misunderstanding it. Once that confusion sets in, scammers can turn one technical fact into a very personal emergency. That is why clear information matters so much for retirees, for caregivers, and for anyone helping parents or grandparents manage money safely. Before we wrap up, one more question for you. If someone called tomorrow and claimed a $10,000 transaction put your Social Security benefits at risk, would you know the first safe step to take? If this video helped make that answer clearer, then it did its job. Stay cautious, stay calm, and always separate the confirmed rule from the rumor built around it. If you want more verified updates explained in plain language, you can subscribe and follow along here. This channel is focused on helping seniors, retirees, and Social Security beneficiaries sort out what is officially confirmed, what is only being discussed, and what may simply be a scam dressed up to sound real.